how to trade Elliott wave corrective triangle from a different angle. How to trade Elliott wave corrective triangles from a different angle. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders for Elliott wave trading. Our website is www.24elliottwaves.com. The title of the video is how to trade Elliott wave corrective triangles from a different angle. All right. So there are different types of Elliott wave corrective triangle. We have the ascending triangle. We have the descending Elliott wave triangle. We have the contracting Elliott wave triangle. And we have also the ascending Elliott wave triangle. In this tutorial, we're going to use an Elliott wave triangle talking about the US dollar Swiss franc currency pair on a monthly chart. We have a triangle right here, and we want to analyze it in real time. So we want to put into use the wave principle or the wave theory to make practical trading decisions. Now, it is one thing to know about the Elliott wave triangle, and it is another thing to identify them and also to apply them to make profitable trading decisions. So I have here a triangle, and we're going to look at it together, and I will go through the process, the step that one should follow if one wants to use the Elliott wave triangle. All right. Because what I have noticed is that a lot of traders will learn about Elliott wave, but most traders find it difficult when it comes to apply it on a live chart, in real trading. So the purpose of this video is to help traders, master, the Elliott wave corrective triangle trading. So let's get started. I have here another chart, real time, so you can see here the triangle. So here we have what we call ascending triangle. You can see this triangle, there was equal high here, this high, this high, this high here. Follow my cursor on this chart. I hope you can see clearly, Can we zoom into this? That's all I can get, All right, so you have equal high, and we have higher lows. You see here, higher lows, but equal top. This is an ascending triangle. Here it is. Beautiful drawing. All right. A descending triangle will have equal low, but a declining top. So you have a high, a lower high, and a lower high. All right. Some traders, one time a trader said to me, this is the devil triangle. All right, that's something else. All right, we don't want to get into that subject now, All right, so this is what we call an ascending triangle, higher lows, and then equal top. This is an ascending triangle, All right, and then we have a descending triangle where we have equal low but lower tops, Then we have what we call, a contracting triangle. It's also called closed triangle. So contracting is contracting, So in this case, we have higher lows and we have lower tops. This is contracting triangle. Higher lows and lower tops is contracting, And then we have the fourth type of triangle, which is also called open triangle. But very often you hear traders talk about expanding triangle. The opposite of contracting triangle is expanding triangle. Now, this is about a theory, all right? As I explained to you, we're going to go back now to the chart, and we will try to apply, okay, the Elliott wave corrective triangle, and from there, try to see whether we should buy or sell or forecast, okay, what the dollar Swiss franc currency pair is likely to do using the Elliott wave corrective triangle. So there are 4 types of triangle, as I showed you already, okay, the ascending triangle, so higher lows, equal top, okay, descending triangle, equal low, lower tops, okay. Then we have contracting triangle, also called closed triangle, but I want you to remember the word contracting triangle. We have lower tops and higher lows, and then we have expanding triangle. In this case, you can see that we have higher tops, okay, and lower lows. Higher tops and lower lows. This is the open triangle, and we have, okay, what we call an expanding triangle. So this is about a theory. So when we are talking about Elliott wave corrective triangle, think of ascending triangle, okay, and contracting triangle, and then do the opposite. So ascending, all you have to remember, ascending triangle and, okay, contracting triangle. Then you do the opposite. What is the opposite of ascending triangle? Now you have a descending triangle, okay? What is the opposite of a contracting triangle? It's an expanding triangle. Here it is. So if you remember, okay, the ascending triangle, you will remember the opposite, which is the descending triangle. If you remember the contracting triangle, you remember also the opposite, which is the expanding triangle. Now, let's go back again. Talking about the theory, the triangle, the first thing that traders must understand, the triangle gives us a warning. That's it. Okay, remember that. The triangle will give us a warning. They are very often a continuation patterns. So if the price goes up first, but this is the theory, if the price goes up first and then form a triangle, there is a high chance that the price will break out of the triangle and continue to move to the upside. But it is not always the case. I want you to remember that it is not always the case. Sometimes I watch some video when they say, it is always like this. I don't like to talk to traders like that. It's never always like that in the financial market, except the market pattern. The market patterns, the rising channel, the declining channel, and the horizontal channel, okay, are always the market pattern. Always. That's it. That's the only time you can say, all right. Everything else can change. You will see sometime, my friend, the price will go up like this, okay? And then we form what we call the ending diagonal or ending triangle at the top. That triangle is a loud, okay, reversal pattern. You will see a small, you see even on the 5 minutes, price go fast, 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 fast up, and then we go choo, consolidating a smaller triangle, and then pop out. All right? So it's not always a continuation that we have after we see a triangle, but very often they are continuation pattern. Okay. They are also corrective pattern. So if you are talking about corrective pattern, the next question is, what are they correcting? So a corrective wave must correct a motive wave, an impulsive wave. So when you see a triangle, an Elliott wave corrective triangle, you want to find out which impulsive wave it is correcting. This is critical, you want to know. So whenever you see a triangle, ask yourself, which corrective wave is it correcting? Okay, you must know which one. We also have, okay, complex corrections, all right? When we have, okay, complex correction, this can be a little bit tricky, all right? Okay, so I don't want to go into complex correction because it's too complex for traders at this stage. We'll come back to that in another time. But for today only, we want to concentrate on simple things, all right? Because our ultimate goal is to simplify the wave principle without diluting it, okay? So let's go back now. So we know the 4 triangles, they are corrective patterns, all right? And I don't actually need to mention to traders, talking about the theory, you are likely to see Elliott wave corrective triangle during the 4th Elliott wave. So when you are thinking of, Elliott wave corrective triangle, think of the 4th wave. You are likely to see it in the 4th wave. Now, some trader will say to you that it's always in a 4th wave. Now, for us as a 2-4 Elliott wave traders, we don't use that word all the time. It's not always in the 4th Elliott wave. All right, that will save you all sorts of problems, because if you stick that into your mind that it's always in the 4th wave, you will be surprised. And here it is, this is one example here. It is not in the 4th Elliott wave. All right, so but very often it is in the 4th Elliott wave that we see the triangle, because it's a shallow correction. Okay, so looking at now, let's go back now to the dollar Swiss franc currency pair. We want to apply the wave theory, the theory about the Elliott wave triangle on a real chart to see whether it adds up or not. Okay, to forecast what the dollar Swiss franc is likely to do. Okay, so looking at this chart, I don't want the video to be too long. You can see that the price was going down. Okay, here the dollar Swiss franc was going down from 2008 all the way to 2000. Okay, the lowest low was achieved in 2011. All right, okay, so it was going down in this session. It was going down. Okay, and then it tried to go up a bit, and then they push it back down. We have what we call the slanted, inverted head and shoulder chart pattern. This is the left-hand side shoulder. This is the head. This is the right-hand side shoulder. This is one of my favorite chart pattern. Okay? Inverted head and shoulder. So it's clearly here on a weekly chart. It is also a pattern that we use if you want to count Elliott wave. It usually signals the end of a downtrend. So when you see an inverted head and shoulder chart pattern on any time frame, you'll go to the higher time frame to validate that pattern. Okay? Otherwise, you'll see some funny, okay, inverted head and shoulder somewhere, and it's not a valid inverted head and shoulder chart pattern. So here we are, we have an inverted head and shoulder pattern. So if we draw, so I draw my bearish trend line, the blue line here. Pay attention, I don't want to remove that line because I need them later on myself for trading. Okay? I'm going to draw another line here. You see this point here, I'm going to draw. So stay focused, please. So here we are. If we cover it like this, pay attention to the line that I'm drawing now. And I will color it into pink because lady can trade better than men. That's what I've noticed. So here we are. I have another pink line already on the chart, so I'm running out of which one should we use now? Okay. Okay, let's use the dark green, okay? Okay, that it's not very clear. So just pay attention carefully. This line here, okay? It's a very important trend line, okay? Here, okay? See here? The price was below that bearish trend line. Now it went out, break above it, and retest it right here on the edge. Alright? It makes sense? Right here. But counting Elliott wave, let me remove at least my pitchfork tool. But before I remove it, all I want to say to traders, maybe I'll draw it later on, okay, because we're going to talk about it. If the price is out of the triangle, start going up, people must not forget this okay, pitchfork tool. Okay, that's all I want you to remember. Okay, if it start going up, it's a resistance level. So I'm going to remove my pitchfork tool now. So if we start counting Elliott wave on this chart, okay, my friend, let's start. We're learning now, let's put it into use, okay? So you are learning about Elliott wave. You must now try to count with it. So this is my first Elliott wave. So an inverted head and shoulder chart pattern. Price is now dashing out, running away. Poo, 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 poo. Look, you break resistance on the left-hand side, yes or no? You break them. We can go a little bit deeper to analyze the internal wave of this move from here. 1, 2, 3, 4, 5. You agree? I hope so. All right, this is to go fast, okay? I'm teasing you now, okay? Can you see? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, okay? So this is my first wave. So, as I said to you, I'm running out of color now. So I want a color that they can see. So what I'm going to do now, I color that one into green, and I'll use pink because I think pink is quite visible on this chart. That's why I use it a lot. So you see here, it's my first area wave, okay? Right here, it went up big time, boom, 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 up after the inverted head and shoulder. So for this USD Swiss franc currency pair, this is my first area wave, okay? Then something has happened here. What has happened here, okay? Were you in the market? Okay. The Swiss Central Bank has stopped capping, okay, the euro against, okay, their currency. And during that time, we have noticed that, okay, the dollar fall against, okay, the Swiss franc here. This is the decision made by the Swiss Central Bank right here. You don't want to forget that. So let's put a spot there. Decision made by Central Bank in Switzerland has caused this the cancellation of our first area wave. But here we will not restart counting the wave, because normally if a wave is cancelled, we should restart counting wave. We can do that by labeling this one here as our first wave. Okay? So if you apply our guidelines, we will say that this is our new area wave. But I don't want to do it because of the triangle, okay? I want to talk about something else. If I was counting wave, I will do it now. So this is our new first wave, just remember. Because if the second wave cancels the first wave, what do? We restart counting the wave. And this is our new first wave. Now, this decision made by the central bank has created what we call a distortion. Price went down too far, too fast. And because it was a distortion, if it's truly a distortion, market will correct it. And you see, they correct it. They bring it back to the starting point again before they start again. You see? So this was a distortion. That's why the price, it filled the gap quickly. Say, correction, they corrected. It was a distortion. Market rectified the distortion by bringing the price to the starting point. All right, we are talking about area wave corrective triangle. Stay focused, please, my friend. It's going to be, okay, bumpy, right? All right. So we see a triangle here. So we see that the price went up first, and then went down, and then went up, and then it's stuck in this red triangle. You see the triangle? Okay. So which triangle is this? It's a contracting triangle. Lower tops and lower lows. It's not in the fourth wave. You see now? It's not always in the fourth wave. This is in the second wave, all right? So my new first wave, if I was counting in a wave, will become this one, because the first one has been cancelled and the market rectified it. So my new first wave is this one. But as I said to you, I want to focus on this one for now, okay? What usually takes place, you see, if traders are not paying attention to the market environment, what is happening in the market, traders that are counting, okay, wave can get into trouble. I know what has happened here, I'm aware of it, and I know that this is my new wave count, my new first wave. Therefore, if I'm talking about this red triangle, in fact, the correct red triangle will start from here. Let's put another line here. Remember what I said to you, a corrective wave will correct what? A multi-wave, all right? Because our first multi-wave has been cancelled, we might restart counting the wave. This is the guideline that we follow, a 2-4 Elliott wave, okay? You won't see anywhere else. All right, we can be proud of that, okay? So this is to make you laugh a bit. So now, so our triangle, in fact, is here because our first wave has been cancelled. This is our new first wave. So the second wave is being formed in a triangle, all right? The next thing that I want you to remember, according to the theory, we want to know the internal waves, okay, the subwave of a triangle, talking about the Elliott wave corrective triangle. What is the formation of an Elliott wave, okay, triangle? Pay attention. It's free, 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 free. You get it for the first time? All right, okay, you get confused a bit. Don't get confused, okay? I said free 5 times, okay? First time free, second time free, third time free, fourth time free, fifth time free. It's free, 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 free. This is the formation of an Elliott wave triangle. Let me explain myself, okay? It's nothing new, okay? And it's very simple, okay? You're going to get it now. You know, when other traders are talking about triangle, you will hear them talking about symmetric triangle, all right? Chart pattern, normal chart pattern traders will talk about triangle. They look at triangle, they draw it, okay? And they say, this is a triangle. Yes, it is a triangle. Now, for an Elliott wave practitioner or an Elliott wave technician, he or she will not say it's a triangle. He or she will look at the internal wave. This is what I meant by looking inside the price instead of looking at the price. Now, there are various types of Elliott wave triangle. We have also the running triangle, the beautiful running Elliott wave triangle. That is a powerful tool to forecast what the price, whether we're going to have a breakout or a breakdown. Okay? So, now for somebody who is practicing Elliott wave or using the wave principle, he or she will now analyze the internal wave and know what is likely to take place, what is the next price move. This is how powerful the Elliott wave triangle are. I'm going to bring you back again because you can see that I'm a bit excited now. So you can hear this is the formation. You see here 1, 2, 3. That's the first tree. 1, 2, 3. That's the second tree. 1, 2, 3. That's the third. 1, 2, 3. That's the fourth. And 1, 2, 3. That's the fifth. And we call them A, B, C, D, E. Now, so we have ABC chart pattern. We have A, B, C, D chart pattern. Now, when we are talking about A, B, C, D, E, we are talking about the Elliott wave triangle. So if you go, for instance, to 24elliottwave.com, click on ABCDE. I'm still building that page, okay? So I will add more video to it, all right, for that section because it's more advanced wave analysis. So remember, the internal wave is free, 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 free. So probably go down 1, 2, 3. So in this case, the price was going up first. Okay, so you see this section here, price was going up first. Then a correction began. 1, 2, 3, that's the A. 1, 2, 3, that's the B. 1, 2, 3, that's the C. 1, 2, 3, that's the D. 1, 2, 3, that's the E. So at the point E right here, because the price was going up before, the market will expect it to go up, to continue to go up. Continuation. They will load it here. This is a powerful pattern to forecast the next price move. Instead of buying the breakout up here, Elliott wave trader will buy at the end of the point E. Why? Because they are looking at the internal wave. They understand 1, 2, 3, 1, 2, 3. Even here, they will sell at C, at the point B here. They will sell here and bring it here. You come down again, 1, 2, 3. They will buy again here, 1, 2, 3. For day trading purposes, we can do that, okay? So we see the setup here at point B on the daily chart. That day, we see here, price went up first and then 1, 2, 3, 1, 2, 3. As a day trader here, this day we give priority to sell signal top-down trading method. On a daily chart, we see it. We switch to the hourly time frame, and then we go to the entry time frame, and we day trade nicely. We bring it down nicely. Day trade, give priority to sell signal. It reaches the end of the point B. Now we start C. We can again give priority to bullish signal here, bring it to the end of C here, and then 1, 2, 3 again. And here we become a swing trader, position traders, loading it for medium, term at least, and allow it to go up more, continuation, powerful stuff, Now, it looks very simple when we talk about the theory. Now, if you are a new trader, don't go and use real money straight away. Test it, practice, develop the skill first, before you start, rushing around, so to speak, doing all sorts of things as I did myself before, all right? It makes sense? All right? So, price went up first, and then it's consolidating. So, the triangle is correcting an impulsive wave, a motive wave. Let's go back again to our chart. Here we are. This is our first wave. So it was first, this one has been cancelled. Following our guideline, this is our first wave now, Here it is. Beautiful, isn't it? Gorgeous. All right. Now a correction has begun. Look at the ordinary trader. We say, George, this is a triangle here. Yeah, it is a triangle. But now, as an area wave trader, we know what is happening. We know that this is now our first wave. Now price coming down. We are looking at how the price is coming down. That's what I meant by looking inside the price. How is the price coming down? So now it comes down 1, 2, 3. Even the children can see clearly that I'm not lying. It went down, it went up, it went down. Good. We all agree, If you disagree, so you need to have some glasses, So now again, it went up, it went down, and then here it is, it went up to this point. So now traders see, this is what I'm talking about. You see now, here it is, pay attention. They say to you that if you did that 1, 2, 3, 1, 2, 3, now we, as an area where traders should click now, we say what's going on is we're going to have a triangle. So price was going up first, and then we see 1, 2, 3, 1, 2, 3. What are you waiting for? Give priority to sell signal here first. And then, and then draw a line. So know that it's going to go down a little bit, but it's not going to go below this low. Or at least know that it's going to go down. You don't know which triangle is going to be formed, but you see now that there's a triangle likely to form. And you know the 4 type of the triangle. So you will look for opportunity to sell here, yes or no. All right? And if most professionals see this, what will happen? My friend, pay attention. Very often, all right? Very often, I say to you, I won't hide anything from you. Very often, if everybody sees it, the price will go down fast. And you will not see the internal wave anymore because everybody see that it's going to go down. So they all sell and the price will rush down. Trading computers will see it. Algorithms traders will see it. And they will sell fast and the price will come down. And you will not be able to see your orderly 1, 2, 3. You won't see it. It makes sense? And sometimes from frequency, it may just rush fast. Boom, to the top. Why am I saying that? Okay, stay with me. Here we are. Look here. So we see 1, 2, 3, 1, 2, 3. Here we are. Look. Do we have 1, 2, 3 now? Okay, you see what I'm talking about, okay? It's no more 1, 2, 3. It's just boom, down. All right? They see it now. Everybody saw it. Boom, down. And we don't have it anymore. Now, this session here, if we want to see it, let's color it into orange. We need to go to the lower time frame. And I can assure you that we won't be able to see it. Sometimes you can change time frame, and you won't see it. But because of what has happened here, 1, 2, 3, 1, 2, 3, the triangle did not change. The triangle is still in place. And price respect it on the edge, and people bought it here. All right? But we didn't see the 1, 2, 3, the orderly 1, 2, 3, because everybody is selling, and they're selling fast, and the price ran down fast. But it doesn't mean that we didn't have it. It's hidden. There's nothing we can do about it. All right? There's nothing we can do about it. If we go, for instance, to the daily chart, okay, this is the session. Yeah, it's a little bit here. So this is the session I'm talking about. It's a little bit 1, 2, 3 here. See, it went down like this on the daily chart, so it becomes a little bit visible on the daily chart. If you want to see the internal waves, if you can't see on one time frame, we need to go to a lower time frame. So it becomes a little bit clear here. Okay, it's 1, 2, 3 again. All right, it makes sense. All right. Okay, let's go back again to our weekly chart. We were on a weekly chart, yes or no? So again, 1, 2, 3. We see here we can see it went straight down, boom. But on the daily chart, we see now that it's 1, 2, 3 down. Okay, and then what has happened? So we have, this is the A, so talking about A, B, C, D, E. We want to know where we are. So if I draw a line like this, okay, too many lines now. You need to focus, okay? Let's color it, I'm running out of color now, okay? In green, hopefully green will come clean. So this line here, that's the A, all right? So if you stay focused, you follow me. This one here is B, color it also in green. As you can see, you have too many lines. Now, stay focused, please, my friends. Stay focused, please. 1, 2, 3. From here to here, that's the A. And then 1, 2, 3. That's the B. From here to here. And then the hidden 1, 2, 3. From here down to here. Okay. Let's color it now into green again. We color it before in orange. So A, B, C. Where are we now? We are in the section of, okay. All right, A, B, C, D. All right, D. So you see the D went up. It went up. So if you having difficulty to count wave, ask your children to do it for you. They will do it. Keep it very simple. So it went up on my weekly chart, and then pull back, and then hit it here. 1, 2, 3. All right. So it's my D now. So I'm expecting, what are we expecting now, my friend? Which one are we expecting now? Okay, you get it, okay? So A, B, C, D. We are expecting E to bring the price here. All right? So this is my wave count. Now, trader know what I'm saying, doing here. Trader that are following, I know what I'm doing here. Why I'm saying is my wave count. Okay, it's my wave count. So my expectation is that the price has a high chance, not a certainty. All right. So don't be, okay, stubborn or arrogant. Don't ignore other traders. So there is a high chance that the dollar Swiss franc currency pair, this is my forecast, has a high chance to pull back again on the edge of our triangle somewhere in this region. Now, the triangle that we have here, there's a high chance that the price may not go below this low. So, in this scenario, I will give priority to bearish signal. If I receive a valid sell signal at a resistance zone, I will use a top-down trading method to trade it. If the signal fell, I will come out. I'm giving priority to sell signal. Does not mean that I will sell anyhow. But if I'm buying, I need to be careful because my expectation is that the price will go down. It does not mean that I cannot buy. If I decided to buy, I know behind my head that this thing can come down. This is how we use Elliott wave. We don't want to force it. We use it as a guide to forecast what the price is likely to do. And now we wait. If the price is doing exactly what we are expecting, what do we need to do? We take advantage of it. Okay, like professional traders using a top-down trading method without violating the market pattern. As I explained to you, you can be wrong with your wave count, but if you are wrong with the market pattern, or if you trade against the market pattern, you'll definitely lose. You don't want to trade against the market pattern. Your wave count can be wrong, but we do not trade against the market pattern. So this is my new first wave. Now we are having, okay, in the second wave, a triangle. according to the theory, the triangle rarely take place in the second Elliott wave. Here it is happening in the second wave, all right? So don't say that always, don't say that, okay? Can happen. The only thing that is always are the market patterns. So we see now A, B, C, D, and we are now in E. We are expecting the price to come down to this level, all right? You see now? So some trader will say to me, George, say to me now to go and sell. Don't do that. Okay, don't be like an old trader. Okay, so now I'm on a daily chart. Okay, draw a channel. You see, join the high on the edge. Okay, on the edge. Okay. So you pull it here today. Tomorrow, if you want to trade it, okay, we use a top-down trading method. You give power to sell signal. You receive a sell signal on the edge. Okay, you take it like professional traders. The signal fail, just come out. Okay, don't force it. Pay attention to the economy news too. All right, the economy news can change the technical analysis. So we say all this today. If tomorrow, okay, the central bank in Switzerland again came out and said something crazy, you see another tall candle here. You say, George, what are you talking about? Okay, so pay attention to the economy news. They can change the dynamics of the market. Okay, the technical trading. Check Forex Factory. Check Google Finance. Okay, all right. Very, very important. So you apply this to stock. All right. Check the fundamental, check the news, and perform at least Google Finance as it tests. Okay, you are trading Forex, pay attention to the economy news, what time of the day, very, very important, okay? All right? So this is about how to trade Elliott wave corrective triangle from a different angle. So it's not finished yet. Okay, so this is my wave count. Now I'm going to do the next exercise. So what I say to traders, we count the Elliott wave. We must validate our wave count by going to the higher time frame. So the exercise I've done now, I've done it on the weekly chart. To validate this wave count, I must check, I'll have a look on the monthly chart, quarterly chart, yearly chart, and see whether is it mambo jumbo or is it adding nicely together, all right? Okay. Another exercise that I revealed to traders last time, which I do, is to go now into the mind of other Elliott wave practitioners. What can they think? So other wave practitioners, we see here, all right? So we draw our bigger triangle here. Okay, they may count this as my first wave too. So I believe they will count it as a first wave. But they will count they will consider their triangle like this. They will call this as A, which is abnormal because it counts completely the first wave, a violation of the wave principle. So they may count some of them. I know. They say this, okay, the A, B, C, D, E. So for them, the triangle is ending here, and they will expect the price to break out here and continue to go up. What we have noticed in this messy market is that sometimes, all right, some powerful market participants count the way wrongly, and they can move the price, and you'll be amazed. Okay, they count it wrong and they get away with it. All right, so don't be surprised if it pop up here and you receive, okay, a clear-cut bullish signal, which means you want to buy. You want to buy where? At a support level. In fact, we have a level here that we highlighted for trader before, 9911. So there's one support level also below that, 9841. So watch that level, 9841. If you break above 9841 and find a support below it, trade it. If the price is in a rising channel, trade it. Buy together with these okay, crazy traders. Okay, don't fight the market. Okay, if it's going up, buy in this zone above 9841. There's another level above it, 9111. Okay, but still we can buy above 9841. Going into the mind of other traders, some traders may say this is the first wave, and they say A, B, C, D, E, and they expect the price to pop out nicely and go up. If our okay analysis is wrong and they are right, we will join them here and buy above 9841. If the 9841 is converted into support level, if you break above it, wait first, wait for it, let it come back and retest it and find a support. Okay, gently, okay, it makes sense. Okay, all right. So this is about going to the mind of other Elliott wave traders that will call this A, B, C, D, E. But imagine we should have another move down. Why? Because the Federal Reserve is waiting for the dollar to pull back so they can put up interest rate. In normal condition, the Federal Reserve want the dollar, the market, to sell a little bit the US dollar. Though the long-term trend is bullish, the general, big market participants are buying the US dollar. But the Federal Reserve is under pressure because the US dollar become too strong. The market was buying it too fast, Now they want it to pull back a bit. This is my, expectation. And it will be normal for, the price to pull back to this level. If it does not, it continue to go up, one way or another, the Federal Reserve may say something that will force the US dollar back down before they can put up interest rate. That remains to be seen. Do not take my word for it. Trade the price, pay attention to the market pattern, use a top-down trading method without ignoring, the economy news, the fundamentals. It makes sense? It is also powerful. To summarize this video about how to trade Elliott wave corrective triangle from a different angle, we have 4 types of Elliott wave corrective triangle. The first one, the ascending triangle. The second one, the descending triangle. And the third one, the contracting triangle. And the fourth one, the expanding triangle. The internal waves, talking about Elliott waves, very, very important to know the internal wave is free, 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 free. 5 times, And these waves are called A, B, C, D, E. All right? Corrective waves. A corrective wave might correct an impulsive wave. We are likely to see an Elliott wave corrective triangle in the 4th Elliott wave, but it's not always the case, but very often in the 4th wave. In the example that we are looking at today, it's a bit complex because there was a distortion here. A wave has been cancelled. We must restart counting the wave following our Elliott wave count guidelines. We cannot call this yet the end of the triangle. We will see whether the market will see exactly what we see. But if they see exactly what we see, there's a high chance that the price will pull back to this level here. But if the price goes above the level of 9841 and find support, we will buy it too. But remember, if you are buying the dollar, US dollar, any currency pair starting with the US dollar at the moment, be gentle and be cautious. All right. If you like this video, please give us the thumbs up. If you dislike it, do not go away. Please give us the thumbs down. All right. If you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. If you say, George, I love you so much, I love your videos, feel free, to subscribe to our channel. You have any question, you have any suggestion, put in the comment section, You want us to talk about another pattern, put in the comment section. We read the comment and we record videos, So video will come and we will answer question by posting more, tutorials. We wish you the very best in your training. And until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to trade Elliott wave corrective triangles from a different angle. Speak to you soon.